Hey guys, and welcome to today's episode. So, in today's episode, I'm going to break down a GBPUSD trade that I took on this week. Also, this is the 21st of August, but I took this trade on the 19th of August 2026. So, in this trade, I'm going to break down exactly how I took this trade that bagged me a nice 1 to 5 risk to reward ratio, basically almost a 1 to 6 ratio. So I'm going to break down the ins and outs of exactly how I do it, from the idea to all the way to the implementation. So buckle up and enjoy. So on this GBPUSD trade, uh, normally I start my analysis on the weekly time frame. So, but this time, because it's a full trade breakdown, we can go all the way to the monthly time frame. I want to show you a step by step, a step down of how I start, how I get the ideas, all the way to how I take these trades. So, let's get into it. So, on the monthly time frame, on GBPUSD, so this is the GBPUSD on the monthly time frame. And on the monthly time frame, as you can see, price was forming this move to the upside, as you can see. So this is where it started. As you can see, the monthly time frame, this is a double bottom right here before price broke through this high, and also this swing high. And you can see, as you can see, price has been price has been getting support on this area right here. So you can see this is the first touch, then here, then this swept through that low, then another double bottom right here. So we can clearly say that the monthly is, oh, as you can see, I have already identified that high. So the price has done this first touch, then this sweep from that low, then another double bottom on that low. So this clearly tells us that the market is bullish and the bears are strong. So we move lower to the 1 week time frame, and on the weekly time frame, this is the weekly time frame, we could see that on the start of this week price was bullish. As you can see, this is bullish. So this is a double bottom and a sweep from the low, after which price broke through this high and did this nice engulfing to the upside. So this is telling us that the market is inherently bullish. So this supports our monthly time frame analysis. So the bulls came in, engulfed all the way right here. So this week, as the start of this week, we already knew that the market is bullish and we're looking more of buying than selling. So after I've identified what trend the weekly is in, I move low to the daily time frame and to identify these major levels and areas of interest that I'm looking to take this trade from. So moving to the daily time frame, and on the daily time frame, as you can see, this is that bottom on the weekly right here, the first and the second. Then price did a sweep from this low, broke out of this high. Let me just identify them for you and retest. So that's the breakout from that high. So price then formed this nice head and shoulders pattern, as you can see. So head and shoulders, after which price broke through this high, then retested all the way back to this first high that was broken. So inherently, if a market is moving bullish, it tends to always go back to the first highs. Why? Because let's talk about the economy and imbalances. If you understand imbalances, not in the chart, not on the weeks and all that, I'm talking about imbalances in the economies. So there's this trade deficits and over. So the market tends to balance itself out. So if think of it as think of it think of it as a business, and the expense and the profit side have to balance out. So this is like the books. So the market tends to always go back to this imbalances that was left and move higher. So in this case, this is the first low that was broken. On the monthly time frame, this is just as strong bullish candle. Then it left out these entire gaps because you can see market didn't retest this low. So after this retest, price came all the way up to this zone. So as we can already identify, this market is bullish. The monthly is bullish, the weekly is bullish. So the monthly and weekly price action are bullish. On the daily, the structure is bullish. So we can confidently say that the buyers are more prominent in this market. So let's get rid of this. So moving lower, so this is the daily time frame. So on the daily time frame, what I do on the daily time frame is I identify what structure the market is in, what are the areas that the market is looking to retest this structure in, and I position myself on the right place to wait for this. And I'm going to show you exactly how I do it. So on the 4 hour, so this is the 4 hour time frame, and on the 4 time frame, we can see that the market did another head and shoulders pattern right here. This is the first. This is an inverse head and shoulders pattern. So as you can see, before then actually breaking out and doing this double bottom retest right on the neckline. So we already know that this market is bullish, and you can see the structure that is forming is supporting more buying than selling. So this is the main question: how do you take these trades? I'm going to show you exactly how I did it. So moving back to the daily time frame, as you can see, this was the overall trend in which the market was moving in. This, as you can see, this is the overall trend. So the market only moves in two ways, not three ways. But technically, if the market is moving in a downtrend, that is an entire formation in which the market aligns itself in this pattern. So mostly, you can say patterns, but mostly think of it as pockets. That the market is moving in this pocket, then breaks out, then forms another pocket. So if the market is in an uptrend, then starts a retracement, it has a trend in which that retracement is going in. So in our case, this is the trend. And the market actually did break from that trend right here and even did a retest. Okay, so this is the daily time frame. Moving to the 4 hour time frame, we can see that this retest is also a double bottom on the 4 hour, which also coincides with our neckline of our inverse head and shoulders pattern, as you can see. So head and shoulders pattern simply tells you that the buyers are more prominent than the sellers. Okay, so let's get rid of this. So after this overall trend was retested, the market actually did come and do a double bottom before actually breaking through this structural high. So so since we are doing a top down analysis, we aim to go all the way down to the 1 hour time frame. So that is where I take my entries. So on the 1 hour time frame, as you can see, so this is the double bottom on the 4 hour time frame. But if you look closer on the 1 hour, the 1 hour actually did sweep from this low right here. Price did sweep from this low, then went forward and broke through this high. So not only is this market bullish, but it's also breaking lows. It's also sweeping the lows and breaking the highs. So this is a healthy bullish market. So what do? We anticipate for that corrective pullback before we take the next impulse. So as you can see, price had an hard time breaking through this major zone of resistance up here. So it has tested one time, two times before actually breaking. But if you take time and look clearly, what is this? So what you're going to do, you're going to look at the idea. So basically just use the idea of the market. So if you use this idea, take this first and second. So the zone retested one time, then the second. So in this case, this is our first high. And remember what I told you about the market always going back to the highs. So the market has to balance out before it also moves higher. So let's put our zone here, then did this double bottom here, then broke out and did the same exact thing that it's doing right here. The first retest, then goes, then forms the second retest and a double bottom on the second retest. This is so textbook, as you can see. Another double bottom. So take this and put it out here. And as you can see, this is an easy head and shoulders pattern. First head. So this doesn't have a shoulder. The market breaks out and retests on the upside. So basically that is this idea we were taking. And so after identifying this, so what do we do now? We identify that high that you're looking to trade. And this is a major zone of structure. As you can see, it is identified differently. This is a very major zone of structure on the daily and the weekly time frame. As you can see, let me just move back to the daily. Let me show you on the daily time frame. As you can see, the daily time frame has tested this area 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 times already. So we wait for the market to be on this zone because we're looking for the path of least resistance. We don't take a trade, then hits the zone, then yeah, we're left wondering, is it coming back to my stop loss? What am I going to do? So you take trades in the path of least resistance. So in our case, the path of least resistance is from this major zone to this next zone. So, and I'll show you in a few. So move back to the 4-hour time frame. And on the 1 hour, this is where we're looking to take these trades from. The 1 hour, the market did this retracement, broke out the first retest, then did this retracement to the second zone. So as I was telling you, the market moves in pockets. So this retracement is a trend on its own. We are bullish, but this market is selling. So this is a pocket on its own. So identify it as you can see, this is the trend in which the market is moving. So we wait for this shift of this trend of the retest to confirm that the market is inherently bullish on the monthly is bullish, daily is bullish, weekly is bullish, 4 hours bullish, but the 1 hour in this case right here, this is a bearish trend. So what do? Wait for that small pocket of the bearish retracement to end before we take the bullish confirmation to the upside. And as you can see, this was my plan on Sunday. So I was just basically waiting for a double bottom on the 4-hour time frame. So let me teach you a trick, guys. If the market is forming a double bottom on the 4 hours, it forms a quad bottom on the 1 hour. So quad bottom just simply means 4 bottoms on the 1 hour. Because before a market buys on the 4 hours, it does a double bottom on the 1 hour. So if you're waiting for a double bottom on the 1 hour, that means that the daily is buying. If there's a double bottom on the daily time frame, that means that the weekly time frame is buying. So you can use that. You can test that yourself. So looking at the 1 hour, after the shift in this trend, the market actually broke out and did a sweet double bottom on the retest of the trend of this retest. So identify this is also a trend because the market is retesting in certain pocket. So after that, as you can see, this is exactly what I was waiting for, and the market did that spectacularly. Okay, so after this, Now the market has not only retraced this trend line, but is also at this previous high structure. So this is telling us that the market is bullish on all time frames. Remember, we want to align every other time frame in our favor. Remember, we want to take this trade in the path of least resistance. So you can't be taking trades that the bears can enter anytime, the bullish can enter anytime. And as you can see, the market played out spectacularly. Look at this. Absolutely low resistance all the way to the zone of structure. As you can see. So this netted me a nice 1 to 5.3 risk to reward ratio in a couple of hours on the 4 hours time frame. As you can see, there was no bears in the entire duration of our trade. So this simply tells you that we took this trade in the path of least resistance. So you don't anticipate to get these trades when the market is bearish or the market is indecisive. You wait for the market to align on each and every time frame to take your trade. So let me show you one final thing. This is how I take my entries. As you can see, price did this nice engulfing candle confirmation. As you can see, that is exactly what we were waiting for. This trade played out spectacularly according to the plan. So we waited for this minor pullback to this previous high structure. Using that same example is the same exact thing we used to identify this high. So after this engulfing, I took my trades right at the bottom. This trade simply flew to the upside. Simply flew to the upside, netting me a nice 1 to 5.3 risk to reward ratio. So that said, so this is exactly how I did it. And looking on the daily time frame, you can see that the market, this is where the trade was taken. The market simply played out in a single day. So that is the power of trading in the path of least resistance. You don't want to be the one forcing the market. You want the market to come to you. The market to align everything, align what it wants you want to see for you to take that trade, and execute on it flawlessly, manage the risk on that trade, and trade effectively. This was also sent all the way to my WhatsApp group. So I have a WhatsApp group that I send these trades prior to me taking them. So if you want to be part of that, check the link in the description. So that said, I think that is it. That is exactly how I did this trade. So click the subscribe button and subscribe for more. Thank you.